Welcome to the Deep Dive. We're the place where we dig into compelling sources to find those hidden patterns, those surprising truths that shape our world and, yeah, our finances too.
That's right.
Today, we are jumping headfirst into a really powerful, and I have to say, pretty provocative newsletter from the Macro Butler. It's titled Ad Bellum Trump Parare.
Which translates roughly to As the World Braces for Trump's War.
Exactly. And the subtitle really grabs you. August is when emperors flex, markets vex, and the world loses its mind. Quite the setup.
It definitely sets a tone.
So our mission here is to unpack what this newsletter is claiming. We're talking about, well, predictions of global conflict, big market shifts, and these deep historical cycles.
We want to pull out the key insights for you, keep it engaging, informative, but without getting totally lost in the weeds.
Right. And the core idea they start with, everything is energy, and everything moves in cycles. Let's start there. What cycles are we talking about?
Well, the most obvious one, the one everyone kind of knows, is the business cycle.
Oh, yeah. Expansion, peak, contraction, trough, rinse and repeat.
Exactly. That familiar economic roller coaster. The newsletter even brings up Joseph Schumpeter.
The economic detox guy.
That's him. Seeing recessions as capitalism's way of spring cleaning, innovation, shaking things up, making way for the new.
Okay, so that's familiar ground. But then the newsletter goes somewhere else.
It really does. It zooms out, way out to the solar cycle. Describes it as this 11-year cosmic mood swing of our sun.
A mood swing.
Yeah.
For the sun.
Apparently. It goes from, quote, chill to rage mode. During solar maximum, you get more sunspots, big solar flares, plasma eruptions.
Stuff that can mess with satellites, GPS, power grids.
Yeah, exactly. Though you do get nice auroras out of it sometimes. Then during solar minimum, things quiet down. Space weather gets calmer.
Okay, interesting. But how does that connect to, well, us?
To finance.
Here's the leap. The newsletter makes this pretty surprising claim that, quote, sunspot charts impact stock market crashes and political revolutions.
Seriously. Like Wall Street is reacting to sunburns from 93 million miles away.
That's the implication. It definitely challenges how we usually think about market drivers, doesn't it?
Yeah.
It suggests there are these bigger, maybe stranger forces at play.
Okay, from cosmic cycles. The newsletter then pivots to something much more down-to-earth, but maybe even more unsettling, the war cycle.
Precisely. And the core idea here is that big global events, especially conflicts, aren't just random. They follow patterns. The newsletter highlights three key ones: an 8.8-year cycle, a 17.7-year one, and then the big one.
The dominant one.
Yeah, the dominant 53.5-year cycle. And looking back, it seems to line up pretty remarkably with major conflicts.
Well, like what? Give us some examples.
Okay, so think War of 1812, the U.S. Civil War, the end of World War I in 1918, the U.S. entry into World War II.
Wow.
Even the Korean and Vietnam Wars fit within its upswings. It apparently bottomed out around 1995. Remember the peace dividend talk?
Vaguely, yeah, after the Cold War. Right. But since then, according to this analysis, the cycle has turned up again, and it's accelerating. The next peak is projected for 2027.
Okay, that's soon. What are the other cycles?
Well, the 17.7-year cycle also seems pretty accurate. It apparently mirrors things like the Spanish-American War, the Panic of 1907, Korea, Vietnam again, and it took a sharp upward turn in 2014.
Yeah, and the newsletter says that forecasted escalation by 2019.
Which, looking back, seems pretty spot on. The argument is these cycles run like clockwork. The next big event, the next crescendo, it's not if, but when.
So pulling that all together, the newsletter is basically saying the world is on the brink of a violent turn.
That's the language it uses, yes. Escalation building through 2025 and beyond.
And the possibilities are grim. Renewed terrorism, civil war in Europe, unrest in the U.S., Middle East conflicts flaring up, Eastern Europe.
China-Japan clashes, South China Sea disputes, cyber warfare, currency wars.
Or all of the above.
That's the nightmare scenario painted, yes. A perfect storm of conflict.
Okay, deep breath.
Mm-hmm.
What does this mean for investors? For your money?
Well, the potential market impact is huge. The newsletter suggests, maybe counterintuitively, that U.S. equities could actually surge, at least initially.
Really? During conflict?
That's the projection. But gold and commodities could enter really powerful bull markets. On the flip side...
Let me guess. Interest rates up, bond prices down.
Exactly. Especially long-term bonds, they might collapse. The newsletter puts it bluntly. This storm will, quote, strip the unprepared of their wealth, or make others richer than Midas.
High stakes.
Extremely. And there's a strong link drawn between these war cycles and commodity booms.
Right, you mentioned that conflict makes prices spike.
The newsletter says every time. Ukraine is the fresh example. But it goes further, introducing a 120-year war cycle.
Even longer.
Much longer, showing apparently remarkable agreement with huge historical conflicts. World Wars, Napoleonic Wars, French Revolutionary Wars, even back to the Hundred Years' War and the Punic Wars between Rome and Carthage.
So this isn't a new phenomenon.
It cites Richard Kelly Hoskin's work, War Cycles, Peace Cycles. His finding was that major wars tend to break out during long uptrends in commodity prices, the war cycles.
And peace aligns with downtrends. Peace cycles.
Precisely. The
Yeah.
logic makes sense, right? War causes shortages, boosts government spending, disrupts everything, and ramps up demand for raw materials. It's a feedback loop. Conflict and inflation feeding each other.
And where are we now in that cycle?
According to the newsletter, the current war cycle started with the commodity low back in 1999. Think about the escalation since 9/11, Afghanistan, Iraq, the Arab Spring, Syria, Libya, ISIS, Russia-West tensions, Ukraine, Israel-Hamas, the Houthis, Israel-Iran.
It's been relentless.
Absolutely. We're 25 years into it. The historical average length is about 33 years. Meaning it could imply another 8 years of rising commodity prices and deepening geopolitical instability. This cycle seems far from over.
Okay, now, let's talk about August. The newsletter's title specifically mentions it. Emperor's Flex, Markets Vex. Why August?
Yeah, this is where it gets really specific and kind of fascinating, historically speaking. August seems to have this unique, almost brutal connection to conflict throughout history.
Like a pattern within the pattern.
Kind of. The newsletter points to examples. Augustus Caesar the month is named after him, right? He secured his power, creating the Pax Romana, after winning the Battle of Actium in August 31 BCE, though that peace was, enforced by the sword.
Okay, what else?
Hannibal's massive victory over Rome at Cannae, August 2nd, 216 BC. Then jump forward centuries. World War I kicks off, August 1st, 1914.
Wow.
The brutal siege of Stalingrad begins, August 1942. Hiroshima and Nagasaki, August 6th and 9th, 1945.
Chilling.
Even more recently, Iraq invading Kuwait, August 2nd, 1990. The newsletter calls August a crucible of war's fury.
So the argument is history has this rhythm,
Yeah.
and August is a key beat for conflict.
Exactly. And the implication is if you understand this cadence of history, you won't be surprised by what's happening now or what might happen next August.
Which brings us back to the present, and that provocative claim about a figure dubbed the manipulator-in-chief or warmonger-in-chief.
Right. The newsletter asserts very directly that this figure has pinpointed August 1st, 2025 for a major escalation, pushing tensions with Russia towards nuclear brinkmanship.
And it calls this a declaration, not diplomacy.
Stark language, which immediately raises the question, what about the economic fallout?
Yeah, what's the economic weapon here?
The newsletter argues this figure keeps using the US dollar like a blunt weapon, but isn't getting that this economic terrorism, as they call it, is actually fueling the rise of BRICS and pushing countries away from the dollar.
De-dollarization.
Exactly. The source mentions threats of things like 100% tariffs on nations purchasing Russian oil, targeting China, India, Turkey specifically.
But are they complying?
Not according to this. It says these nations are prioritizing their own energy security, ignoring the ultimatums. Russia's just rerouting its oil and gas to, friendlier partners.
Okay, let's take India as the example used in the newsletter. There's talk of a charming 25% tariff starting August 1st for buying Russian oil.
Yes, that specific threat is highlighted. And it's striking because India's imports of Russian oil have absolutely exploded since 2022.
How much?
Went from maybe 68,000 barrels a day pre-war to over 2 million barrels a day at the peak. Why? Because they were getting it $10 to $20 cheaper per barrel.
That's a huge discount.
Massive. Russian crude now makes up almost 40% of India's imports.
So the newsletter points out the hypocrisy. U.S.-India trade is big, U.S. runs a deficit, yet threatens tariffs that would hurt India.
Right. It suggests India might pay $6 to $10 billion more per year if forced to buy oil elsewhere. But clearly, India is choosing its own path here, prioritizing its economy and energy needs.
This ties into the newsletter's broader critique of sanctions, doesn't it?
Absolutely. It calls them the neocons' favorite magic trick that never works, and it rattles off examples.
Like Cuba.
Cuba, 6 decades of sanctions, no regime change. Iraq in the 90s, GDP halved, Saddam stayed. North Korea, still defiant. Iran, massive damage, but the regime held.
So the conclusion is sanctions often backfire.
That's the argument. They often fail to break nations and instead push them together, forming new alliances, like BRICS, which keeps expanding.
The newsletter brings up a really controversial historical parallel, too, involving FDR and Japan before Pearl Harbor.
It does. It argues FDR's 1941 sanctions on Japan, particularly the oil embargo, weren't just economic pressure, but were, quote, calculated moves designed to provoke.
Provoke Pearl Harbor. To get the U.S. into WWII.
That's the chilling interpretation presented, that it gave FDR the silver platter he needed to enter a war Congress wasn't willing to vote for directly. It frames it as a deliberate strategy.
That's a heavy claim. Moving from sanctions to resources. The newsletter says, free trade is out, resource wars are in.
Yeah, a stark shift. And it highlights a major U.S. vulnerability. China controlling 70% of rare earth minerals, essential for tech, for defense.
And Ukraine is brought up here, too, regarding its mineral wealth.
Hugely significant. Ukraine's minerals are estimated at $15 trillion, maybe 15% of global reserves. But
Russia controls a lot of it now.
almost half, according to the source. Especially in the Donbas lithium, coal, gas, rare earths, and Zaporizhia, more rare earths. Meanwhile, China dominates global production, especially the heavy rare earths critical for modern weapons.
So the conclusion is,
America's enemies hold the mineral upper hand. A very blunt assessment of the resource landscape.
and all this conflict, this maneuvering, it comes at a cost. The newsletter says, war is the fastest way to bankrupt an empire.
A timeless warning. It uses France's history as a kind of cautionary tale, says they practically turned sovereign default into an art form.
Really? How often?
Lists examples from Henry II in 1558, Louis XIV, the Mississippi Bubble, Louis VI leading to the Revolution, Napoleon, right up to the 2010 European debt crisis. A long history.
But the most startling example was the Great Depression connection.
Yeah, describing it not just as a crash, but a ruthless financial war started by France shorting Austrian bonds. That led to the credit-installed bank collapse.
Which then took down thousands of U.S. banks.
Exactly. 9,000 U.S. banks failed. U.S. stocks crashed 90%. The newsletter frames it as a targeted financial attack with devastating consequences.
So connecting all this history to now, what's the warning for our current financial system?
The warning is stark. As the world potentially sleepwalks toward WW3, these wars breed stagflation, that toxic mix of stagnant growth and high inflation.
Which pushes governments towards more control and maybe default.
That's the fear. It fuels inflationary busts, government seize more power, and they get closer to the edge of default, which leads to questioning U.S. treasuries.
The risk-free asset.
Exactly. The newsletter challenges that myth hard. Points out that since the dollar left gold in '71, the bond market has ballooned to over $300 trillion. All the gold ever mined, only worth about $22 trillion.
So the question is, trust paper promises or hard assets?
Precisely. Is it wiser to trust politicians' paper promises or centuries of preserved value? And it argues the U.S. has already defaulted, just silently, through inflation eroding purchasing power.
Are there market signals pointing this way now?
The newsletter highlights one indicator it says is largely ignored, the ratio of the S&P 500 to the aerospace and defense sector.
What about it?
When that ratio falls below its 7-year moving average, which it did last November, it supposedly signals a drop in U.S. energy efficiency and a shift from boom to bust.
Interesting. And defense has outperformed IT.
Yes, since Russia's invasion of Ukraine, which the newsletter calls the spark of WW3, aerospace and defense has apparently beaten IT, and with less volatility.
The newsletter sums this up with 3 acts of empire decline.
Yeah, a sort of historical pattern it sees. Act 1, reckless spending, debt, inflation. Act 2, when borrowing gets tough, tyranny at home, and blaming an external enemy, it explicitly mentions Putin here.
And Act 3?
Default, government collapse, new regime, old debts wiped clean. The newsletter warns we've just entered stage 2.
Okay, given that bleak outlook, what's the survival playbook for investors, according to this source?
The core shift in mindset is focus on return of capital, not just return on capital. Preservation becomes paramount.
And how do you preserve capital in this scenario?
Physical gold and silver are presented as the ultimate anti-fragile shields, meaning they get stronger in chaos.
Why them specifically?
Because they are free from counterparties, free from surveillance, and non-confiscable, unlike assets in the banking system, perhaps. They're positioned as the hedge against collective stupidity and government overreach.
What about cash and bonds?
For cash, the advice is short-term, high-quality USD bonds and T-bills. Keep it liquid, keep it safe, maintain agility. But long-dated U.S. treasuries, avoid them. called uninvestable and returnless.
And stocks. Is there a place for equities?
Yes, but selectively. Hunt for lean, low-debt, high cash flow champions, companies that can thrive even with reshoring, trade wars, and rising defense spending.
Does it suggest a specific allocation?
It introduces something called the Smart Defense Equity Portfolio, an equal split: 33.33% IT, 33.33% energy, 33.33% aerospace and defense.
And the claim is this is outperformed.
Yes, apparently it's beaten the S&P 500 and the traditional 60/40 portfolio since Feb 2022 with less volatility, though it adds, cheekily, with more moral ambiguity.
So, summing up the warnings. Don't trust banks. Don't trust government bonds long-term. Don't count on inflation to save you.
Pretty much, don't trust banks, they might hold your money forever. Don't hold bonds. Governments are serial defaulters in disguise. Don't count on inflation to erase your debt, it might just erase you first.
Yeah.
Strong words.
And the primary action.
Do own physical gold and silver real stuff in real vaults in sane jurisdictions. The emphasis is on physical and storing it outside the immediate reach of governments, citing FDR's gold confiscation in 1933 as the historical warning.
The bottom line on gold.
In gold we trust because gold is for war. Doesn't get much clearer than that.
Okay, so to recap this deep dive, we've looked at cycles, business, solar, and especially these powerful war cycles shaping things. We explored the strange, bloody history tied to the month of August. And we've unpacked the newsletter's view on the shifting geopolitical map, economic warfare, and the major challenges facing traditional finance.
And threaded through it all is this core message from the newsletter. Survival, let alone success, requires wisdom. Knowing your enemy, yes, but also knowing yourself, your vulnerabilities, your position. Being blind to either, it suggests, is a recipe for failure in war and finance.
It definitely leaves you with a lot to think about. The newsletter quotes Sun Tzu. There is no instance of a nation benefiting from prolonged warfare. And King Pyrrhus. One more such victory, and we are undone. Which makes you wonder.
Is the current path one where even winning could lead to ruin? That's the unsettling question posed. And the final call to action from the source is incredibly forceful. Debt is surrender. Discipline is your weapon. Sovereignty is your shield. Build your fuck you money so no tyrant, banker, or bureaucrat can dictate your fate. Powerful stuff. Then it ends with Thucydides. The secret to happiness is freedom, and the secret to freedom is courage.
A potent message to end on. Thank you for joining us for this deep dive. We definitely encourage you to keep thinking about these connections, these cycles, and what they might mean for the world and for you.